One of the most popular exchange-traded funds is again on the down, with the sell-off likely to worsen. Hey there, welcome back to the channel. ARK Invest's flagship innovation ETF fell more than 10% in December and is currently down 23.7% for the year, putting it in bear market territory. So why do you think Wood, the founder and CEO of ARK Invest, is no longer interested in buying ARK Innovation stock? Before we get into the details, please give this video a thumbs up and subscribe to the channel if you haven't already. Make sure to turn on post notifications so you don't miss on any of our latest videos. Let's get this video started, shall we? ARK Invest CEO Cathie Wood designed and managed the ARK Innovation ETF. ARK Invest is a billion-dollar futurist fund to invest in the technology and entrepreneurs who will change our future. Robotics and artificial intelligence, genomics, and Internet of the Future, and fintech are among these technologies, and each has its own ETF dedicated to that issue, with the ARK Innovation Fund built on the best assets from each fund. Cathie Wood established herself as a master of the modern exchange-traded fund last year. Her flagship ARK Innovation ETF rose by 153% in 2020, easily beating the general stock market. Wow, that's interesting, right? ARK invests in companies that have the potential for rapid, short-term growth as well as long-term relevance by focusing on creative, disruptive technology. Wood makes the final decision on ARK's investment decisions as to the company's CIO and portfolio manager. Wood has received a lot of praise in recent years for her investment performance. ARK Invest's primary focus is disruptive innovation, which allows the firm to invest in businesses whose products and services are expected to address the demands of a world balancing crisis. ARK's big bet is that technology will be the most effective solution to these challenges and that a disruption-first attitude will be a primary way to higher returns. On ARK Invest's website, Wood says, "We're all about finding the next big thing. Those hewing to the benchmarks, which are backwards looking, are not about the future. They're about what's worked. We're all about what is going to work, and Wood's choices have proven to be successful. ARK-K and ARK-G have performed strongly during the last 5 years. Since the summer of 2016, ARK-K, which comprises tech leaders Tesla, Zoom, Coinbase, and Shopify, has grown by nearly 450%. Meanwhile, ARK-G, which invests in molecular diagnostics and genetics and owns companies including virtual healthcare service Teladoc Health and Regeneron Pharmaceuticals, is up about 340% in the same time span. So, what makes ARK Innovation a unique investment opportunity? The fund tries to capture long-term growth by having a low relative return connection to classic growth strategies and a negative correlation to value strategies. In an exchange-traded fund that invests in rapidly shifting topics, ARK-K provides a lower-cost alternative to mutual funds with true active management. It might be a complement to standard value or growth strategies as compared to typical indexes. Before investing in ARK-K, keep in mind that it's not your ordinary investment option, as the overall risk may be slightly higher than other funds. After all of this achievement, ARK Innovation dropped in 2021. As a result, Woods is no longer buying stock. Let's check out why. Cathie Wood's 2021 has taken a turn for the worse in December, and with ARK Invest exchange-traded funds falling and highly volatile trading as investors leave unprofitable tech stocks. In 2021, 6 of Woods' main ETFs are already in the red. ARK Genomic Revolution is down more than 30%, while ARK Fintech Innovation is down over 15%. Investors were able to generate profits as a result of government and central bank stimulus programs, and they poured into showy tech names. In 2020, ARK's Innovation ETF was expected to return roughly 150%. However, many of those tech investments have begun to backfire in recent months, as global central banks have begun to prepare to turn off the stimulus taps in reaction to growing prices. Concerns regarding the Omicron variant are also influencing investors. Many tech firms, particularly those in which Wood specializes, are not likely to become adequately profitable for many years. With central banks expected to increase interest rates in the coming year, the long-term profits offered by these companies have begun to look less appealing in comparison to other sectors of the market. Investors will face less financial and political support to boost the economy and markets in 2022, with the Fed withdrawing liquidity by tapering bond purchases. That means that high-growth stocks, which are totally based on low rates and high top-line growth, will be severely impacted. Teladoc, Square, and Coinbase have all fallen in value. Many of Woods' funds would be performing considerably worse if it weren't for her large bets on Tesla, which have risen more than 40% this year. A sort of inverse ARK innovation ETF that bets against Woods' stock recommendations, ticker SARK, has risen more than 20% since its launch last month, indicating that many investors have noticed an opportunity. Despite the fact that investors are leaving ARK funds, Wood remains hopeful. In defense, Wood says that innovation stocks are in deep value territory while trading continues to fall, with the S&P 500 down 1%. Wood stated that ARK remains committed to its 5-year investment horizon despite recent volatility and headline risk, noting that year-to-date inflows have greatly exceeded outflows. Quants and algorithms, Wood said, have dominated trading activity under rising inflation, favoring low multiple stocks in energy and financial services, which she believes will be disrupted by autonomous electric vehicles, digital wallets, and decentralized banking. She told CNBC that the classic S&P 500 stalwarts are in a bubble because they have a less promising future. She stated, "We are not in a bubble. Our strategies would be flying if we were. I think we've not begun rewarding innovation for what's about to happen, and so that's where our conviction comes from." Wood had proposed an ARK on steroids fund that would also bet against stocks. ARK is releasing its Transparency ETF, which is supposed to track an index of transparent companies. Things don't appear to be so bad when viewed from a broader perspective. Over the last 5 years, the average annualized total return for ARK funds has remained about 30%. Does inflation have an effect on ARK innovation? Many broad-based market indices, including FANGs, have risen to new highs since mid-February 2021, shifting away from growth companies and toward value and defensive stocks in the process. Fears that inflation is the product of excessive monetary and fiscal policy responses to the coronavirus and its variants, rather than a short-term problem connected to supply chain delays, are one of the main reasons for this rotation. Inflation, which is linked to strong economic cycles, tends to favor value stocks such as energy, financial services, industrials, and materials. Higher interest rates, on the other hand, tend to damage long-term assets like aggressive growth companies by boosting discount rates and reducing the present value of future cash flows. Typically, the companies that support those stocks are compromising short-term profitability in order to spin rapidly in order to take advantage of significant growth possibilities. In November 2021, Federal Reserve Chairman Jerome Powell hinted that inflation might not be transitory after all, increasing the rotation toward value stocks and giving investors additional cause to sell for a tax loss in the innovation sector as the year draws to a close. ARK came to popularity during the pandemic as a result of numerous well-timed choices. Despite this progress, it's expected that the ETF's underperformance through 2021 would continue in the long run. This is based on ARK's individual picks and concentrations rather than the underlying industry. It's suggested that all holdings in ARK's various ETFs be sold in the future. Experts believe ARK's funds have a bright future and advise investors to remember its idea. Okay, so that concludes today's video. We're looking forward to seeing you in our next video. If you found this video informative, please like it, subscribe to the channel, and turn on the bell notifications so you don't miss any future updates from us. Thank you for tuning in.